Good afternoon. This is Damon Bond from Bond Realty Group, LLC, located in Bridgeport, Connecticut, serving Fairfield, New Haven County, Connecticut, and also serving parts of New York, Westchester, Manhattan, and the Bronx. Welcome. So far we talked about two past things, and that is, number one, how to get your credit intact, clean up your credit if it needs to be cleaned up, how to the process of obtaining a mortgage. We talked about that. Now we're going to talk about the big question. A lot of people have the question of how much exactly is a down payment? What it is I need to put down on a home? And that's a very interesting question. And the answer to that is it depends. Now, there are several avenues you could take. Most of these, like I said before, are national, regardless of what state or municipality you live in. And then there are ones that are specific to that particular state and or city or municipality. We're going to talk about those later on. So for the most part, you have what we call conventional mortgages. You have FHA. And then you have VA loans. All right, I'm going to talk about all three. I'm going to start with the VA loan first. Now, VA loans basically are for veterans, and to all the veterans out there, thank you for your service to our country. I'm just honored that you guys are willing to sacrifice and volunteer to, go, abroad or domestic and defend this country. So you have VA loans. VA loans are designed for veterans. Usually they offer some very generous features to them, if you will, such as a lower down payment amount, terms and so forth. So those are specifically designed for veterans. So if you're a veteran in the armed forces, you definitely want to check out obtain a VA loan. You go that route. So that's VA loans. And all lending institutions, for the most part, do VA loans, so it's not a problem to get. They're not obscure or anything like that. Many of our former armed service personnel qualify for VA loans. The next loan we'll talk about is what we typically call your conventional loans. Now, contrary to popular belief, you don't need to put 20% down in order to get a conventional loan. So, for example, if a house costs $100,000, you don't need to put down $20,000. You should, but it's not necessarily required. Basically, a conventional loan is anywhere between 5% and 20% down. Yes, you get a conventional mortgage for 5% down. I've seen it done before. I work with people who have 5% down, so they got 95% loan. Yes, you can, and it can be done. So what's the difference? Well, first of all, if you put down 20%, you remove the element what's called PMI. PMI basically is your mortgage insurance. Mortgage insurance is what you pay for putting less than 20% down. Now, once you get the mortgage, you start making your mortgage payments. As time goes on, your PMI will eventually disappear. And usually this is when you have a certain amount of equity into the home. It will disappear. So you no longer be paying PMI or mortgage insurance. That's what that is. You could put down 10%. But most people will put down either 10 or 20%, but you can put down 5%. Now, why would you put down 5% as opposed to 20%? Well, lots of reasons. First reason is, let's say the property you're buying, you want to do some things to it. When you buy a home, you may need to put some furniture to it. In other words, you don't want to end up cash poor. So let's say you have 20% put down rather. You don't want to empty out your bank account, your savings account. So a lot of people have the rationale is like, well, why should I, if I can put down 5%, why should I put down 20% when I will empty my bank account? And floors need to be redone, they got to be painted, we need furniture, the kids need to do some furniture, whatever it may be, the kitchen, we want to do some things in the kitchen, what may be done. So that's why people choose to go that route. The 5% route. They could afford to do 20%, but they rather go that. Now, let's say the higher your down payment is, the lower your mortgage is going to be. So someone who puts down 5% is going to have a higher mortgage than someone who puts down, let's say, 20%. Per month. That's just the fact. And you don't have to put down 20%. You can put down more. You can put down 30% or 40%. You can put down 50%. I've seen it before. But usually those are the numbers we're playing with. So those are conventional, no matter what part of the country you live in, that's pretty much what it is. So far we talked about VA. We talked about conventional in some depth. Now we're going to talk about what we call FHA mortgage. Now the FHA mortgage stands for the Federal Housing Authority. The government doesn't give you the mortgage. right? Your lending institution gives you the mortgage. So whether you're doing what Joe Schmo mortgage lending, or you're dealing with Bank of America, it's the institution that is going to give you the mortgage. The federal government will guarantee the mortgage. So that way, if for any reason, shape, or form you should default on a mortgage, which I know none of you will do because we're all responsible here, then the federal government pretty much will guarantee the mortgage. So that's what FHA mortgages. FHA mortgages are great. FHA mortgage is 3.5% down. It used to be 3% up until 2009, 2010, somewhere around there. But it's 3.5% down. They're really, 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 really great. So once again, if you're buying a $100,000 property, pretty much you'll come up with $3,000 or $3,500, roughly speaking. Is really great. This type of mortgage makes home affordability available to working class and middle class peoples. So it's really, really, really great. And if that's what you want to do, you should ask, yes, I want an FHA mortgage. Now, also the beautiful thing about FHA mortgage is that the credit threshold is not that great. You could actually get an FHA mortgage with a credit score, and I've seen it before, as low as 620. 620 is kind of like the cutoff point. Anything below 620, they can't do anything for you, but you can certainly qualify for FHA mortgage with a credit score as low as 620. I'm not encouraging you to have a 620 credit score, don't get me wrong. We want that higher, better rates and things like that, and less of a hassle getting a mortgage, but I'm just saying, that's like the bottom line. It's 620. So it's 3.5% down. The paperwork is a little bit more involved. Not much. It won't affect closing anyway. I just like to give like another week or two for the closing date. But it's a pretty nifty way to get a mortgage. And so I have individuals who in the past qualified for conventional. They say, okay, we can put 10% down, but instead they chose to do an FHA. Once again, it just goes back to the thing about how they don't want to be cash poor. They have things they want to do to the house. They wanted to redo the floors and remove the carpet and things like that. That's why they chose to go the FHA route as opposed to the conventional route. So you still pay, PMI and what have you, but it's really really great program. And particularly if you live in a high cost area, like the Northeast is high, particularly in the New York, the tri-state area, New York City, Westchester, as well as Fairfield County. You got a lot of expensive homes. So you don't want to go and, if you're trying to, these homes cost, $300,000, $400,000, why put down 20%? I have a calculator in front of me, but why put down 20% when you can easily qualify for, putting down 3.5%? That way, home ownership is more attainable for you. And I always tell people, no, because a lot of people are intimidated because they think, the down payment factor, And I always tell people that, don't be intimidated, don't be scared. You can actually get something for it's possible to buy a home. I used to do home buy seminars in public housing. I used to go to public housing and say, listen, check your credit. It's possible. Some of you may qualify for mortgage, you don't even realize it. Check your credit score. Check over your credit report. I used to tell a lot of these people that all the time. And I say, you actually qualify for mortgage. It's probably cheaper in many cases for you to live, buy a house. It may not be a big house, maybe a condo or what have you, or half a duplex, but it's yours and you get tax write-off, something you can do, if you're paying rent, if you live in public housing. So it's a really, really great way for home affordability. So pretty much those are our natural things. Now, this one is going to be specific to Connecticut. And by the way, if you have any questions, you can always email me at dbond011@gmail.com. D, the initial, my first name, dbond011@gmail.com. Now, this next program is specific to Connecticut. It's called CHAFA. And CHAFA stands for the Connecticut Finance Housing Authority. Now, CHAFA, if you're a resident of Connecticut, you can actually, with a CHAFA mortgage, get anywhere between zero or put anywhere between 0 down payment to 3.5% down. Yes, that's correct. You heard me, 0 down payment. Now, a lot of folks may be saying, well, isn't that what got us to this mess back in, 08, 09? No, what got us in this mess with the whole housing bubble, the whole housing crash, was the fact that they were lending money to anybody who had a pulse. Anybody that had a pulse or breath, they were lending money to. There was no income verification. There wasn't checking. If you had a pulse, then you got a mortgage. That was it. Without any check. CHAFA is different. CHAFA is a responsible program. And what CHAFA does is this. You have to do the same paperwork. But in addition to the paperwork that you do when you apply for a mortgage, you are required to take a class. It's either 4 or 8 hours. I forgot. I got to check it. But I think maybe an 8-hour class. They give a certificate saying you completed this, and it's about the responsibilities of home ownership and things that go into it. So they fix you up pretty good. And people with chattel mortgages rarely default on a chattel mortgages. So yes, it's possible to get a 0% down payment on your mortgage. On a home. And here in Connecticut, they're accepted widely throughout the state. It's not a problem. I work with people who had chattel mortgages before. The transition went smooth. It was smooth sailing, no problem with the deal. So this is something specifically for the state of Connecticut, chattel. All right. In New York, which I'm also licensed in, the city has their own various programs for moderate income borrowers. So you can check out. I mean, there's just a plethora of things out there for the city of New York. Each borough each organization has their own thing. So check it out. Westchester County, same thing. The county government will have their thing. So you want to check that out. It's just too numerous to name. Just go online or call. The county government in Westchester, the city of New York, you call 311 for the city of New York and see what programs they have out there for home ownership affordability. So these are things you can do. So CHAFA is a state thing. And then once again, you have various municipalities. Like for example, here in New Haven and Fairfield County, I've worked with Housing Development Fund. They offer a class. They get what's called bridge loans, where 20% will be covered, let's say, by the city, and the other 80% will be covered by the institution that's lending. I've worked with Mutual Housing of Southwest Connecticut. They did this where 20% came from that fund, and the other 80% came from Citibank, just to name a few. So these things are available for you. You just have to check. So home ownership is obtainable. It is obtainable. Just have to use common sense. We're doing this, and and pretty much that's that in terms of how to different types of mortgages. So once again, this is dbond01@gmail.com. That's my email address. This is Damon Bond. From Bond Realty Group, licensed in New York and Connecticut. So if there's any questions, please feel free to email me, and have a very good afternoon. Take care.